Today, October 16th, the numbers coming from Moscow are worse than anyone dared to predict. The Russian economy, long described as resilient under pressure, is now entering what analysts quietly call a controlled collapse. But that word, controlled, sounds increasingly misplaced. According to data leaked from several regional banks, capital outflow has reached a record high since early spring, while industrial output is shrinking for the third consecutive quarter. Yet the most disturbing figure is hidden behind the official inflation rate. Real household purchasing power has fallen by almost a quarter in less than a year. Experts who previously defended the government's macroeconomic course are now lowering their voices, saying that something fundamental has broken. At first glance, the Kremlin still projects calm confidence. Public statements emphasize adaptation, import substitution, and technological sovereignty. But behind closed doors, the tone is very different. Several sources familiar with recent meetings at the Ministry of Finance describe a sense of quiet panic. The reserves are thinning, the ruble has become volatile even in domestic trade, and new restrictions on currency operations suggest that authorities fear a run on the banks. What used to be managed propaganda is slowly turning into damage control. One senior economist put it bluntly: they can no longer hide the storm. However, the most revealing sign doesn't come from statistics or official reports. It comes from the street. In Moscow and St. Petersburg, small businesses are closing without announcements. Signs with the word now line entire avenues. Rent prices have fallen, but buyers are disappearing. Middle-class families, once proud of their stability, are selling apartments at losses just to cover foreign currency debts. And as always happens in such moments, the atmosphere in the city has changed. Conversations in cafes have grown cautious. People look around before mentioning politics or money. The mood is not of open crisis, but of silent, growing fear. International observers are already drawing comparisons with the late Soviet stagnation, but this time the collapse might be faster. Russia's integration into global trade, once its shield, now works as a trap. With logistics chains broken and key industries cut off from Western technologies, the country's industrial skeleton is beginning to crumble. Even the defense sector, traditionally untouchable, is facing shortages of precision components. They're cannibalizing their own stock. One Western analyst told us, the system can function for a few more months, but not indefinitely. And yet, amid this deepening uncertainty, the state-controlled media continues to assure citizens that the situation is under control. It is this phrase, repeated like a mantra, that reveals the real scale of anxiety. Because when a government insists too often that everything is fine, it usually means the opposite. Still, there's something more behind this calm facade, something officials prefer not to discuss publicly. But before we get to that, a small note. If you want to understand what's really happening beyond the numbers and press releases, stay with us. What follows next may explain why even insiders now admit the fall has only just begun. It began quietly, almost imperceptibly, with whispers in the financial sector. Insiders started to notice irregularities in the interbank market, delayed settlements, sudden liquidity shortages, unexplained technical pauses in trading. At first, it looked like routine maintenance. But by midweek, the pattern was too consistent to ignore. According to sources in the central bank, several regional institutions had already requested emergency support to prevent defaults on short-term loans. Officially, none of this exists. Yet in private conversations, the tone of Russian bankers has changed dramatically, from defensive pride to quiet despair. The illusion of resilience that had carried the system through the early sanctions years is dissolving. The problem is no longer the sanctions themselves, but their cumulative effect. Each restriction, each broken supply line, each loss of access to Western capital markets has slowly eaten away at the core of the economy. Now, as one insider put it, the machine is running on fumes. Industrial production is contracting, consumer confidence is collapsing, and the ruble, despite periodic interventions, keeps slipping into new psychological lows. What was once a carefully calibrated policy of stability has turned into a daily struggle for survival. Still, officials continue to reassure the public. State television speaks of temporary fluctuations, of expected market corrections, of strategic patience. But the numbers tell another story. The manufacturing sector has lost nearly a third of its export capacity, and foreign investors, even those from Asia and the Middle East, are quietly exiting. The once busy terminals of Novorossiysk and Primorsk have seen a drop in shipping activity that can no longer be explained by seasonal changes. Containers sit idle, goods are piling up, and transport workers, long silent, are beginning to complain about unpaid wages. Yet, the real danger lies deeper, in the country's mounting social fatigue. Ordinary Russians are beginning to sense what the official narratives cannot conceal. The prices of basic goods, sugar, fuel, medicines, have climbed beyond what most families can afford. Pharmacies now ration imported drugs, and even common antibiotics have become scarce. It's starting to feel like the 90s again, one resident of Ekaterinburg told our correspondents. But unlike the 90s, there's no sense of new beginnings this time. Only exhaustion. People are adapting not because they believe in recovery, but because they no longer expect change. And yet, the most dangerous aspect of this downturn is not economic, it's psychological. The belief in the system's inevitability, the quiet conviction that it will somehow work out, is eroding. Business owners speak of freezing their operations until things stabilize, but no one can explain when or how that will happen. Regional governors are asking for federal aid that Moscow can no longer fully provide. The facade remains, the polished speeches, the orchestrated optimism, but behind it, the scaffolding is shaking. And this time, no amount of patriotic slogans can mask the sound of cracking foundations. What happens when people finally realize that the safety net is gone? That answer, as sources suggest, may surface sooner than the Kremlin expects. What few outside observers realize is that the breaking point didn't arrive suddenly. It was engineered by the very mechanisms meant to prevent collapse. According to several economists who have worked inside Russia's financial system, the government's emergency policies over the past 2 years have created a fragile loop of self-deception. To maintain stability, the central bank flooded the market with cheap liquidity, forcing state-owned corporations to buy government bonds and support the ruble through artificial demand. For a time, it worked. The illusion of recovery became the regime's strongest tool. But as one insider dryly noted, they built a dam out of paper, and now it's getting wet. Behind this metaphor lies a simple truth. The resources sustaining the Russian economy are finite. Oil and gas revenues, once the sacred pillar of state finances, are falling sharply. Discounts offered to Asian buyers have eaten into profits, and logistical costs have soared. What's worse, internal data show that several major oil fields are nearing critical depletion levels. Yet these figures never make it into official statistics. Instead, ministries release upbeat reports about record production volumes, masking the fact that much of this production can no longer reach international markets. The result is paradoxical. The country is producing more, earning less, and sinking deeper into debt. Meanwhile, insiders describe growing tension between key ministries. The Ministry of Economic Development is pushing for currency liberalization to attract foreign capital. The Finance Ministry insists on tightening controls to prevent capital flight. The central bank, caught between them, is quietly preparing for what one source called a defensive devaluation. That phrase, almost taboo in official circles, hints at something far more serious than a policy adjustment. It signals the beginning of financial triage, a stage where not every institution can be saved. They're already deciding who will be sacrificed. An analyst told us. Smaller banks, weak regions, and profitable industries, they're the first to go. And while this quiet crisis unfolds in conference rooms and late-night calls, its human cost is spreading. In industrial towns from Ural to Kemerovo, layoffs have become routine. Workers receive delayed salaries, often in vouchers or in-kind compensation. Pensioners wait hours in queues for subsidized products that rarely arrive. Local media avoid reporting on these shortages, but social networks are filling with footage of empty shelves and angry crowds. The tone of the comments has shifted, not outrage, but resignation. People have stopped expecting answers. They've learned that silence is safer. At the same time, a new wave of capital flight is reshaping the country's elite. Those who can still move assets abroad are doing so quietly, through proxies, through obscure crypto channels, through property in the Gulf. Others, less fortunate, are trapped inside the walls of their own success. They built their fortunes on state contracts, says one Moscow economist, and now the state is consuming them. It's a grim irony. The system that once rewarded loyalty is now devouring its loyalists. And this is where the real story begins to unfold. Because beneath the collapsing numbers and disappearing confidence lies something far more dangerous, a shift in power itself. Hidden, unspoken, but already underway. Stay with us, because the next part of this investigation will reveal how the economic breakdown is triggering a quiet political realignment, one that even the Kremlin can no longer fully control. By early October, signs of that political shift were becoming impossible to ignore. In several regions, governors began acting more independently than usual, delaying budget transfers to Moscow, quietly prioritizing local projects over federal mandates. At first, officials dismissed it as administrative improvisation. But according to sources close to the presidential administration, a sense of fragmentation is spreading through the bureaucracy. The vertical chain of command, long considered unshakable, is showing visible cracks. They're protecting their own survival, one insider said. Everyone understands that the center can't carry them anymore. The Kremlin's response, as always, was to tighten control. New decrees increased penalties for financial mismanagement, while the security services were instructed to monitor regional treasuries for irregularities. Yet, paradoxically, these measures only accelerated the breakdown. Local administrators, fearing audits and arrests, began freezing projects and halting spending altogether. The flow of money, the bloodstream of the state, started to clot. Construction sites were abandoned mid-frame, procurement stalled, salaries went unpaid. In economic terms, it's called liquidity paralysis. In political terms, it's the beginning of decentralization through fear. What's more, the once loyal business elite has grown restless. Oligarchs who build empires on proximity to power are now losing patience with a system that demands loyalty but offers no protection. Some are shifting their wealth into foreign assets under relatives' names. Others are quietly supporting technocratic circles that argue for post-crisis stabilization, a polite euphemism for regime transition. Officially, no such movement exists. Unofficially, meetings are taking place in private dachas and embassies, under the pretext of charity foundations or cultural exchanges. They're not plotting. One European diplomat told us. They're waiting. But the atmosphere inside Moscow tells its own story. The once lively government quarter feels subdued. The cafes that used to hum with mid-level officials are half empty. Conversations have grown shorter, more careful. Even the tone on state television, polished and triumphant, has started to betray fatigue. Anchors stumble on prepared lines. Experts look away from the camera. The script is fraying, and the audience feels it. In recent surveys, trust in official media has fallen to its lowest level in over a decade. For a regime built on narrative control, this erosion of belief is not a side effect. It's a symptom of decay. Meanwhile, in the streets, the consequences of this hidden crisis become visible in small, painful details. Long queues at fuel stations in provincial towns, delays in pension payments, sporadic blackouts in industrial zones. Officially, all these are temporary difficulties. In reality, they mark the slow unraveling of a system that no longer sustains itself. The Kremlin still has instruments of coercion, but it's losing the subtler instrument of faith. And as history repeatedly shows, once faith in inevitability disappears, the rest follows quickly. Yet behind this grim picture, there's a subtler undercurrent. A new generation of bureaucrats and economists, pragmatic, largely apolitical, are beginning to surface. They speak of reforms, efficiency, digital transparency. They rarely mention ideology, but often talk of modernization without confrontation. Some view them as opportunists. Others see the embryo of a future technocracy. Whether they succeed or vanish depends on what happens in the next few months. Because by all accounts, the country is approaching a point where economic dysfunction may turn into political shock. And that shock, our sources suggest, might not be initiated from above. And so, by October 16th, the Russian economy is not merely faltering, it is entering the stage experts call structural implosion. Outwardly, institutions still function. The central bank issues statements, ministries hold briefings, and officials give calm interviews about planned adjustments. But behind this fragile surface, an irreversible shift is taking place. The national balance sheet, long sustained by energy exports, is collapsing under its own weight. Oil revenues, once the country's lifeline, have fallen by almost half since the summer. The gas sector, too, is crumbling. Pipelines to Europe are now empty, while Asian routes can't absorb the excess supply. They built a system around one artery, says an energy analyst familiar with internal figures. Now that artery is blocked, and the rest of the body is starving. The ripple effect spread far beyond the energy sector. The ruble's devaluation has made imports prohibitively expensive, turning everyday goods into luxury items. Even domestic manufacturers, supposedly protected by sanctions, are struggling, not from competition, but from shortages. Simple components, once easily sourced abroad, have vanished. Factories that produce tractors, turbines, and even kitchen appliances have been forced to shut down assembly lines. Workers are officially on leave, but in reality, they are unemployed. It's a collapse in slow motion, explains a regional economist from Perm. Every week another enterprise disappears, and yet no one reports it. The statistics are carefully cleaned. The truth circulates in whispers. But perhaps the most devastating consequence is the silent erosion of the middle class. These were the people who once embodied the state's promise of stability: professionals, small business owners, educated urban families. Now they are the first to fall. Their savings, eroded by inflation, vanish faster than they can adjust. Their mortgages have turned into traps. Their incomes no longer match rising prices. Many are leaving the cities for smaller towns, seeking cheaper lives, or emigrating quietly to Armenia, Turkey, the Emirates. It's an exodus without headlines, a migration of exhaustion rather than protest. They're voting with their feet, says one sociologist. It's not rebellion, it's retreat. In political circles, the reaction oscillates between denial and paralysis. The presidential administration still demands positive coverage of the economy, while regional officials scramble to hide the scale of unpaid salaries and closed plants. The Ministry of Finance, according to insiders, has begun discussing extraordinary fiscal measures, a coded phrase that, in bureaucratic language, means direct confiscation. The idea of temporary levies on private accounts is quietly circulating again, though no one dares to announce it publicly. The same sources mention a growing rift between technocrats and the old political guard. The first argue for liberalization, the second for tightening control. Neither side trusts the other, and both fear being blamed when the system finally breaks. Meanwhile, the social temperature continues to rise. In small towns, protests are rare but telling. They appear not as political demonstrations, but as economic desperation. Miners demanding wages, truckers blocking roads over fuel shortages, nurses walking out over unpaid hours. The authorities respond predictably: silence, arrests, short-term payouts. But the rhythm of these local crises is becoming relentless, almost mechanical. It's like playing whack-a-mole, admits a source in the security services. You solve one problem, and two more appear the next morning. And yet, amid this spreading dysfunction, the narrative of control persists. State television broadcasts images of new infrastructure projects, modernized factories, and trade fairs with friendly nations. The message is simple: Russia is adapting, not collapsing. But the contrast between image and reality is now too wide to conceal. Even loyal viewers sense the dissonance. Supermarkets display half-empty shelves. Pharmacies ration imports. Cash machines dispense only small sums. The fiction of stability has become the country's last functioning industry. Still, beyond this bleak horizon, something unexpected is beginning to take shape. Inside the bureaucracy, a younger generation, economists, technologists, regional managers, is forming quiet networks of reform. They avoid political language but speak of restoration, efficiency, and post-crisis planning. Some of them are cynics, others sincere pragmatists, but all share the same awareness. The old Russia is unsustainable. They are not building opposition. They are preparing continuity for whatever comes after. And here lies the paradox. The system that once prided itself on total control is now kept alive by people who no longer believe in it. They maintain appearances, sign documents, manage crises, but inwardly they are already looking beyond it. That silent split between action and belief is the final stage of decline. And when that split becomes visible, when even loyal servants start thinking of the future without the present regime, collapse ceases to be a possibility and becomes a process. Perhaps this is where the true story of modern Russia begins, not in its fall, but in what comes after it. Because behind the fear and fatigue, there remains a kind of clarity, an understanding that systems built on illusion can endure for decades, but never forever. And as one exhausted economist told us, it won't explode. It will simply stop pretending. When that moment comes, when the performance ends, the question will no longer be about survival, but about what kind of country will rise from the silence that follows. So stay with us, because the next months will not just define Russia's economy. They will define its future, and perhaps its rebirth.